everyone, glad to have you back on the channel. So, in today's video, I'll show you how I choose stocks and study them. This isn't going to be a funny video. I don't plan to jump around. It will mostly be for information. So, if you have some time to learn about investing, I think you should do it. So I do suggest getting a pen and paper and writing some of these things down as we go through this talk. We'll be talking about different ways to invest and how to find stocks to invest in. We could invest in any of the thousands of companies that are out there. So how do we narrow that down to one or a few companies that we want to invest in? So, that's what the video for today is about. So let's go ahead and start it here and now. So we're gonna break this down in a couple of different segments here. And so the first part that we're talking about are some of the basic invest principles on the basics of picking stocks in general if you want to do active investing. And then we're gonna start actually looking at some of the more specifics, talking about industries, talking about top-down bottom-up strategies. And then finally, we're actually gonna do an example here. I'm gonna walk you through, looking at a financial statement, looking at an annual shareholders meeting statement. It's about 130 pages. We'll go through that a little bit. And just share some of the things to look for when investing in a company. And of course, all of this, you know, this is strictly educational and not financial advice. So, now that we've talked about all of that, let's start this video. So if you want to get 5 free stocks when you're investing, you can sign up for the app down below in the description. It's an investing app, you can buy and sell stocks. It's a favorite of mine. The first thing that we're gonna talk about here, actually, there's a few key elements before we get deep into picking stocks. And the first thing I do when I think about investing is I focus on losing money. Okay, I'm gonna say that again, because it sounds weird, but I really focus on losing money for investing, and this is because I think a lot of people, when they start like investing, especially, they tend to have these ideas of becoming rich, of getting wealthy and making tons of money, and I think this is one of the biggest problems right now is people have these views of getting wealthy and so they're blinded by these prospects of making a lot of money in the stock market, that they end up making rash decisions, they make gambles instead of investments. And so my goal is always to focus on losing money, because if you can limit your downside and then focus on, you know, increasing your upside, that's the most important aspect here. You know, if you have an investment and you lose 90% on that investment now to get back to where you started, you have to make a 1000% return to get back from where you started. After you lost 90%, you have to make 1000% return to get back to zero. Okay, so this is like a really groundbreaking like concept that you need to understand is that always focus on risk, always ensure that you are investing rather than gambling or speculating, because if you're not working on limiting your downside, you're gonna get wrecked in the markets. I mean, it happens to so many people, and if you want to gamble, I mean really just go to a casino, because if you're not doing any type of risk mitigation, then, you know, that's not going to work out very long term. So what I'm always doing is I'm running scenarios and I'm looking at what's the worst case possible scenario for my portfolio. So if I look at my basket of stocks that might have, so I have 15 stocks, what's the worst case scenario with the economy? Could we enter into a recession? Every single possible worst case scenario, I'm running all those to ensure that I'm still properly hedged. We'll talk about hedging portfolios and probably a different video, because today we're really focusing on, you know, how to actually pick stocks, but another really important thing here is getting rid of emotion. Okay, so trying to throw emotion out the door and really focus on logic when you are finding stocks to invest into. And tying that in with emotion is going to be taking your time with investments. So I typically have a rule where I don't invest into a company within the first 24 hours of discovering that company. So this is why I like hot stock tips. Anybody who's telling you, buy this stock, it's gonna blow up next week or something else along those lines. I don't usually do those. I put an idea out the door. And really just focus on logic and taking my time moving slowly and ensuring that I fully understand a company before I actually start investing into it. So make sure that you do this and that every single investment that you make is going to be something that long term you feel comfortable with and you fully understand. Alright. So the last thing that I'm going to say before we get deep into this video here is what I always do for any stock that I will find. So by the end of this video, let's say that we have a stock that we've picked and we've decided that we wanted to invest into it. I will then create a thesis against myself. So this is also really important before you buy a stock. It's important to create a thesis against yourself. So, let's say you really like Tesla and you think it's going to the moon, 4 or 5 times over in the next year. If you believe that, you could say that what I was doing was looking for all the bad things about Tesla and digging deep into the fact that people often have this problem where they start to believe what they already think. They say, I like the stock. So they find all of the good news articles about that stock. They find all the people who love that stock as well and they sort of gather with those people and talk with those people. What you should always do is go to the opposite perspective and figure out why that those other people have a different perspective than you. So with Tesla stock, if I like Tesla stock, I'm gonna go and find people who hate Tesla stock and try to figure out why they hate it. So just remember that as well. Alright, so now let's talk about how to pick a stock. How do we find one? There are thousands of companies out there that we can potentially invest into. So, how do we know if this company is a good one to buy? How much money do we put into it? There's a lot of questions that we might have here. So let's start off with looking at 2 different strategies for finding stocks, and these 2 strategies are very different from each other. So one is called a top-down strategy and the other is a bottom-up strategy for finding companies to invest into. So let's start off with the top-down strategy. So the top-down strategy, it's essentially going to be this like upside-down pyramid where we start off with looking at the macro. So we start off looking at the global economy, we look at the world and then we slowly whittle it down to the point where we end up with one company. So with the top-down strategy, what you do for this to find a stock to invest into is you start with the global economy, you look at the economy, where is the economy going next year, where it's going to be in 5 years, 10 years. Is the world population growing? Is it getting worse? Right? We start with that, we analyze it, we start to understand the global economy, then we whittle it down to a country, probably best off your country that you live in because you already have a decent understanding of what the culture is. Like a lot of other things that are important to understand. So then you focus on study a country's economy, you learn about the Fed or the central bank in your country. And then after that you continue to go from the top down and you move on to an industry. So here's what I suggest doing if you're doing the top-down strategy for finding companies to invest into. You really should focus on a couple of industries and become an expert on those industries. So there are about 11 or 12 like primary industries in the world or like sectors in the market, right? Things like healthcare, financials or tech. And so what I actually just doing is don't try to be a jack of all trades and understand every sector in the entire market, because you're gonna end up being really mediocre at that. So what I do personally, is I pick a couple of different sectors or industries and I really learn a lot about those specific industries and I'll read books about them, I read dozens of books and I'll get really into them. And so that's the third level that we start. Global economy, you look at the national level, then you look at like an industry. So, this could be like say, the energy business. Over the past few months, I've gotten really into this. Then, once you've looked at an industry and tried to figure out where it's going, right? Let's say you study the energy industry and learn everything there is to know about things like how electricity is made, right? And you look at fossil fuels, solar energy, nuclear fusion, geothermal energy, and everything else. You have a really good grasp of it. Then you move on to your main rivals, right? So, you start to look at a few companies. Let's say you want to invest in something like the solar industry. So, you choose 3 to 5 companies that are pretty similar. For example, they might all be in the solar industry, since you've already looked at the energy industry. So you understand what I mean. Now, you're analyzing the solar specific segment there, you're looking at 3 to 5 companies. And then from there you can whittle it down to 1 company or 2 companies to invest into at the end of the day. That is what I do, that is how I use the top-down strategy for finding stocks. You might still have some questions there, like, how do you decide on that one final company or those 2 final companies out of all of those? But that is how you use something like the top-down strategy. You start with the big picture and you move down to the small picture and you get down to the micro on a specific company. Alright, that's one strategy. The other strategy is gonna be the total opposite of that. It's called the bottom-up strategy. And so with the bottom-up strategy, you essentially start off with the company and then you analyze the industry and then you start to analyze, the national economy and then you start to analyze the global economy. So you can use the bottom-up strategy as well. I've done this in the past. The case in which this one might work is, for example, maybe the company that you work for. You look around and say, you know what, I like this company, I think has a great culture. I think it's going places, it's growing really well. And if you think that's the case, then using the bottom-up strategy, you would then compare that company with a couple of other companies, like the core competitors to that company. And then from there, when you analyze those, you say, okay, well, you know what, it still looks like it's doing pretty well compared to its competitors. Then you take it up to the industry. How's the industry doing over the next 10 years? How is it done in the past? What's the future of it? So for example, like if it's an oil company, the future of it might not be amazing because, 20 years down the road, maybe perhaps oil consumption is down, or there could be some big shifts in the energy industry. Right? So you start at the bottom and work your way up until you reach the top. So that's another way to do it. I tend to use the top-down strategy a little bit more often just because I think it's really crucial to spend a lot of time analyzing an industry. Alright, so now I want to share 3 amazing tools that you can use for finding stocks and getting very specific with it. So the first one, it's a basic stock screener, it's called Finviz. They're not sponsoring this, like I have no affiliation with them, but I genuinely just use this website quite often. And so let's just go on it right here and I'll show you around a little bit. So Finviz, essentially what this is, it's a stock screener and they have so many options up here. So if you click on screener, what we have is all these different things. For example, we can sort companies by market cap or by their dividend. Like maybe we only want dividend stocks, or maybe we want something in a specific sector like consumer cyclicals, right? We can decide all of those, we can set those metrics and then we will, see what stocks will still fit into this criteria. If we click on fundamental, we also have other choices, like P or for P, E, or price earnings growth ratio or price to sales. This is also pretty important, price to book, right? So we can start to actually really whittle it down here and find companies that we are more specifically interested in. And you You're probably seeing a lot of ratios on here. We'll talk about some of them here. But the truth is, if you want to learn about each and every one of these, your best bet is going to be reading books rather than watching videos on a topic specific to understanding ratios and specific, financial, basically like measuring the health of a company. Books are going to be your best bet. So another tool that I use is a website called Open Insider. And there's a couple of other sites similar to this as well, but essentially what this does is it shows us what executives and the top shareholders are doing with their shares of a stock. So this is actually like, I always use this before I invest into a company because I want to see where the heads are of people who are in charge of this company. If everybody's selling the stock, like the executives, the CEO, if everybody's selling the stock, that's a pretty bad sign. It means they probably don't believe in the company, and it might be, the Titanic going down. So you don't want to be in a position like that personally. I wouldn't want to. So, let's look at an example. Say we want to invest in a company like Air Products. And so we can see, okay, well, we have some people selling, we have some people buying, these are all going to be important people. Open Insider is only people who have to file with the second. If they own, I believe, over 5% of a publicly traded company, they have to make this filing. And also if they are like an executive in the company or they're on the board, for example, they have to make these filings with the second, which then becomes public information. So with their products, we can see most recently somebody, so we can look up who this is, right? We can see what they're in charge of. You can see like a director sold, some of these other people sold, but some other people bought. So just very interesting to see that over the past 2 years who's buying and selling. So I like using Open Insider. And then the third tool that you can use is some of the features on Moomoo. They do have a stock screener feature available on that as well. So, if you want to learn more about it, you can check that out. I do like that the platform has a pretty good setup for doing technical analysis. They have some good charting features pretty similar to Weibo. Actually used to use Weibo a lot for like looking at the specifics on a technical analysis basis. But Moomoo also works as well. So those are some great tools that you can use for doing some more research about a specific stock. Now, let's actually take you through an example of doing a quick dirty analysis on a company. And so I think what we're going to do is we're going to look at a company called Air Products. It's one that I am invested in. So just for full disclosure, there it is, a very large company. It's like a $50 billion company or something. And the company is kind of dull, but I understand it a little bit. So we're gonna go through the annual statement, about 130 some pages. It's gonna be a little bit long, but I'll show you the things that I really look at when I'm thinking about finally like investing into a company. Okay, so in order to do a full analysis on a company, we need to get the most important document, which is gonna be something called a 10K. And 8K. So 10K is their annual, statement. It's usually gonna be really long when it's the most important. And then we have a thing called an 8K, which is going to be a quarterly report on the financials of a company. So all publicly traded companies in the United States have to release this information. It's a public information. And so you should be able to access this somewhere. So there's a couple places you can access it. But I find that the best way to do this is by going to the investor relations page of the company that you're interested in. And this is going to make sure that this information is up to date and accurate. So for this example, I think we're gonna do Air Products. So for example, what I can do is Air Products, investor relations is what I'm gonna look for here. And you can usually find investor relations page on almost every company out there. So I usually just end up Googling it to make sure that I get to the right spot. So let's go ahead and dig through this here. So we're on the investor relations page of Air Products, which is an industrial company. They sell a lot of gases, it's just one that I'm invested into. It's very large, it's like a $50 billion company. You know, I wouldn't want to talk about small companies on this channel because I don't want to influence the price of them or anything weird. So let's go ahead and see if we can find these reports, so we can go click up on filing/reports. And for full disclosure, I already said this I think, but I do own a little bit of their product stock. So definitely this is not any type of like suggestion to buy the stock or anything along those lines. So we'll see all these different reports here in 8K. That's going to be that quarterly report that we want to take a look at. But let's go ahead and actually look in an annual report. It's gonna give us a bigger, better picture of the company. But typically though, you're gonna want to go for the most recent, whether this is an 8K or 10K. Whichever one is most recent. They just reported their quarterly earnings February 4th. So let's go and actually just look at their annual report though for 2021, and it is a PDF. So here we are, 134 pages. Let's go ahead and start just peeling back some layers here and see what we can find. And we are going to get started with this. Certainly. So we can just see some of the basics here, you know, looking at their business, right? What do? They'll give us a nice understanding of this. They're in industrial gases basically throughout the world. Americas, Europe, Middle East, Africa, global. I know they have a lot of operations in China as well. So we will read through this, look at some of the financial highlights here. So we can see that they're very well diversified throughout the world. This can be good and bad. The good thing about this is that, you know, certainly means that if one country's operations have problems, the rest of the other operations that the world can hopefully help that company like Air Products to kind of stay sustainable and you know, stay alive. The downside of this is, you know, trade wars in general, other problems, you know, things happening with Russia and Ukraine right now. There can be a lot of things that could end up hurting a global company as well. So there's both positives and negatives to something like that. So let's look at some of these important metrics here, and we'll have some more detailed ones later on throughout as we go through this 134 pages here. But some of the basics here that we want to definitely be aware of is that most of these reports are going to be in certain things. So millions of dollars is what this is reported in some financial statements, it'll be different. they'll be in thousands of dollars instead of millions of dollars. So make sure you read this, because otherwise you're gonna look at these numbers here and say, what the hell is going on? I don't understand, like this company make $10,000 this year. So no, they actually made $10 billion because there's $10,000 million. Okay, so that comes out to about $10.3 billion in sales that Air Products had in 2021. So one of the things that we always look at here is looking for growth in things like sales. I think it's pretty straightforward. You want to see growth in sales typically, but it's not going to be the only picture that we're gonna want to look at here. Now, one thing that is really important here when analyzing financial statements and looking over an annual report is before you invest in a company. I really believe you need to read every single word in these documents, because sometimes it's going to be just one sentence in there. That totally gives you the IQ on a company essentially. And I've had this happen before, where I would miss one sentence in a report and I would miss that sentence, and then suddenly weeks later, after I had already invested into the company, I came back and I realized I missed that sentence, and it totally changed my perspective on the company. We'll talk more about that later, but you really do have to read and understand everything in these reports to ensure that it's a company that you want to invest into. So we will talk actually about all these different things later on throughout this document here. So we'll talk about, income profit. Some of these other things, just a terminology for you to know. GAAP stands for Generally Accepted Accounting Principles. So this is going to be following along with certain protocols and things that they have to do to ensure that accounting is, standard among different companies and industries, so that we don't have some big like Enron problem like what happened before. So let's go through here. We can skip over some of this because we are going to talk about more of this later, but you can look at quarter-to-quarter sales when you're looking at something like this. The one thing I will warn you on is I tend to look at things like annual growth instead of quarterly growth, because a lot of businesses are going to be sort of cyclical or seasonal. So for example, a lot of businesses will have a lot more sales in quarter 4, like around Christmas, and then a lot fewer sales in like quarter 1, January and March. We see that a lot, especially with retail companies like Macy's, for example. They're gonna sell a lot more during the holiday season than they will during the summer. So I don't always like to compare quarters to each other. I like to compare years to each other, although maybe, looking at like net income margins are gonna be pretty useful to do that. So we will talk about all of this later on throughout, because it's going to go into more detail there, but let's just look over a couple of things here. Right, so we have things like adjusted operating margin. What does this mean? So what we're looking at here is the sales were $10.3 billion 2000 and $28.8 billion. So it has grown over the course of a year. And we can look at their operating margin, which is about 22%. And factor and a couple of other things, and still, their operating margin is 22%, is down from 2020, which was 24.9%. So a decrease in operating margin tends to be not a very good thing. we want to see those margins increasing typically, unless there's some other things that, we haven't accounted for. Looking at things like earnings per share. This is going to just take what we just saw here and just put it into a per share basis. We'll talk more about that later as well. Some other terms here that you might want to know: return on capital employed, essentially how good is this company at making money on their investments. Let's say they invest into like a new project and they're pumping cash into it. How good are they at returning that money and making more money from the money that the company invests? So that is an important metric as well to understand. Now here's where we get into some really interesting stuff. We're gonna look at things like the board members, the CEO, everything else along those lines. You don't want to skip over this. But just reading through this here, okay, so they have a nice earnings per share growth. This is always going to be important as well. 11% compound annual growth rate, that's what CAGR stands for, compound annual growth rate. But if we get a little bit more specific here, we can actually notice that, for example, in 2021 they had an 8% growth and in 2022 a 2% growth, but if you go back to say 2015, 2016, 2017 they had double-digit growth. They had 18% growth in 2018, 12% growth in 2017. These days, they're getting 2 to 8% earnings per share growth. So it looks like growth might be slowing down a little bit. That's just something that, I noticed right here right off the bat as we're going through this. So definitely we have to figure out why is that happening. There's gonna be a lot of questions that come up as you analyze the stock. And so like going through this, I'm gonna be writing down these questions. Why is the earnings per share not growing as fast as what it was a few years ago? Is that an industry-wide problem? Are they losing a moat? Are there other competitors driving up prices? We need to get to the bottom of that and figure out why the earnings per share growth, it's still growing, which is good, but it's not growing as fast as what it once was. So let's figure out why that happened. And I'm gonna be writing down all these questions as we go through. Write down all these questions. I would say probably we'll spend 20 to 30 hours read through these statements until I get to the bottom of every question that I might have. You really have to be meticulous with this. So they're gonna just talk about a bunch of things. Obviously you want to read this. If you are considering investing into a company, looking at some of the big projects, right? $4.5 billion clean energy kind of lives in Louisiana, $12 billion project. And I believe this is Saudi Arabia and then Canada, so they are definitely worldwide there. Now let's look at board of directors. Don't skip over this part. Many people skip over this. Okay. You have to semi-stalk some of these people. Okay. That sounded bad. Don't actually stalk them. But what I mean is that you need to go and research each one of the people who are on the board and also the executive officers and understand what's their background. What have they done before? Have they grown other businesses before? Did they get kicked out of other businesses because they had problems or they weren't good? And also, look over other things as well. Like, I don't want this to sound like a gist or something. But look at how old is the CEO. Do you think they're gonna retire soon? If the CEO is 102 years old, this could create some uncertainty for the business. Like if they're over 100 years old, that could be a problem. Like, hey, statistically they might not live, another 5 years for 102. So you need to take those things into consideration and not skip over researching the executive officers and the people who are on the board who end up making the biggest decisions for the company. So safely to send me, I can just tell you this, that he's been with the company for at least 5 years now, and he's definitely done a lot for turning around the company. Like I said, I've been investing in the company for a while. So now we're actually getting into the where we are here, Form 10K. This is where the actual statement starts. So the first 14 pages were mostly just filler. Now we're getting to the meat and potatoes of this situation. So the most important stuff that we're going to do as we go through this is, we're going to look at 4 key financial statements, really 3 key financial statements. It's going to be the income statement, the balance sheet and the statement of cash flows. Okay, so we're gonna go ahead and scroll down to those. Now as we go through this, before we get to that, we'll see other things like, for example, risk factors you need to understand, risk factors without a doubt. What are the risk factors? What are the potential problems? Is this company susceptible to inflation? Could they have problems with trade wars? Like, what are the biggest risks for this company? Every statement that I've read from companies, they always have this in their report, is going to be risk factors. So definitely I'm always thinking about risk, right? Legal proceedings. Most companies that are traded on stock markets, and a lot of them, get sued almost every year. They're just big companies that happens. So read through that, try to get a read on that and think about what's the potential that, the company loses the lawsuit and has to pay out hundreds of millions of dollars. It happens and it can negatively affect the stock of the company. So read through those, see what's going on, what type of lawsuits are they in or who are they suing. Also they can get a big cash windfall as well if they sue somebody else. Okay, so that's just like the outline, they're forward-looking statements. We can just kind of brushing this real quick, see the things that they're excited for, what they think, they're looking forward to in the future. But like I said, make sure you read every single line here because these are going to be very, very important. Okay, so we're scrolling through here and I believe that the financial statements, the most important part are around like page 45 or so. So we're gonna just kind of breeze through this here and we're gonna read about, what they do here, the industrial gases business. You really have to understand everything. I mean genuinely to the point where you can walk into the company's headquarters and talk with anybody and understand what they're saying, so that you're not totally clueless on what, blue, hydrogen brown, hydrogen black, hydrogen need to understand all of those different things. Like if you're studying a business like this, right? So let's just continue going on through here. One of the main products, liquid bulk packaged gases on-site gases, how does that operate? How are they selling these products like hydrogen, oxygen, nitrogen? Right? How are they like getting helium? What are their margins, everything else along those lines? Looking at international operations. Okay, so let's just brings to this here environmental regulation. This is one of the risks here for the company is that because they are in industrials they have to jump through a lot of hoops, and for example maybe the EPA will say, we're moving the goalposts and now you need to do this certain thing or you need to do this now, and this consecutively affect the company. Obviously it's good for the earth. So I definitely appreciate that. But if you were considering investing into a company like this, you definitely need to look at that. So reading through here, 20,000 employees safety compensation, seasonality. Their business is not affected by the seasons in a way that is important. This is great to see. So actually maybe we can look a little bit more quarter-to-quarter growth. That could be kind of important. Inventories customers, right? For example, here, there is no single customer that accounts for more than 10% of their consolidated revenues. I always look for this because I've seen it before. There are companies like there's one like Nathan's famous hot dogs. They're really tiny cap, but like they have like a huge customer that like makes up most of their revenue. And so if that customer drops them suddenly, that company could be screwed. So I always look for companies that have no single customer that accounts for more than 10% of their revenues that way. If that customer walks and they find a new person to work with or company to work with, this company doesn't get screwed. So I always like to see that government contracts, they definitely have a ton of government contracts. And just looking over their executive officers as well, their age, like what they've done in the past, all very important. Okay, risk factors, read through this. Obviously. COVID, some other problems that they might have. Just definitely read through all of these, but let's actually start getting down to the financial statements, cause that's the part that's most important. Okay. So we skipped through a couple of things. They talked about pension and some other things that we want to be aware of. But we skipped down to the consolidated income statement. This is one of the most important documents that you can look at here. And so I'll try to go through each one of these lines and explain them to you. And the importance of these. But what I suggest doing, because you want to understand this is essentially like taking the blood pressure of a company and like doing what the doctor does to ensure that you're healthy. Looking at like your your heart rate and everything else like this is where you actually learn about the health of a company is in these three financial statements: the income statement, the balance sheet and statement of cash flows. We also have the shareholders' equity. We'll talk about that in a minute. So, the consolidated income statement of course is in millions of dollars as well. So sales have grown, they show us 3 years here, 2021, 2020, 2019. Sales have grown in 2021 considerably, looks like about $1.5 billion. Sales grew over the past year, but that's not always going to be just the picture that we want to look at. Of course we want to see sales growing. But more importantly I would argue that we want to see income growing as well on those sales, because if you make 2 times more money but you end up losing money, because you're spending so much more to acquire customers or for your product, then is it really worth it getting more sales? That's an important question, So, the cost of sales has also gone up. So a lot along with sales, the cost of sales has increased as well. We have other things: facility closure, $23 million, $828 million. Research and development. They sunk $93 million and to create new products, to create new things as well. It's just gonna be really important there. We have some other things as well in here. But essentially what this comes out to when we take the sales and then we subtract some of these different things, we'll see that our operating income is about $2.281 billion. And this is going to give us a better picture compared to sales. So we can see, let's compare our operating income this year compared to last year compared to the year before that, and it looks like operating income from the outside, it looks like it's growing. So that's good to see there. So as you go through these, if there's something that you don't understand, then honestly your best bet is just gonna be a quick Google search, for example, equity affiliates income. If you don't know what that is, you just go smash the keyboard real quick and just Google it and figure out what that is. But you do need to understand each one of these lines here as you go through, because there could be something that you don't understand and it could totally throw off your view of the company. And in fact I almost invested into a company last week. I was very close to investing into it. And I was reading over the financial statements and I found something in there that I realized totally skewed the numbers, because they were counting P. Loan forgiveness from the government, they were counting that as income on their income statement. And they were counting as like $5 million of income. But like that skewed the numbers, and they were accounting government money from COVID as income. And it was totally messed up the numbers, and suddenly I realized the company actually wasn't that profit anymore. Once I was able to dissect that and figure out what was going on there. And I'm really happy that I did that, because otherwise I would have invested into a company that wasn't actually making that much money. So going through here we have income. And then we can start to subtract things. There's something called EBITDA. EBITDA 2. And so that's going to be earnings before interest, taxes, depreciation conversation. So what this is going to be is, we can start to subtract some of these things, like for example income from continuing operations before taxes, and then we look at taxes. We have to subtract $462 million in taxes. Some other things as well, like discontinued operations. If you sell off certain parts of the business, like they sold off their chemical business a while ago, they might have to subtract some of those things as well. If they've lost some income there. And some other things as well to give us the total net income for Air Products, which comes out to about $2.1 billion. So their sales are growing and also their net income is growing. Those are both beautiful metrics, and it's probably, I would expect, to be reflected in the stock price. If we see that growing, so $2.1 billion in net income, then they'll just break down essentially what we just learned there about on a per share basis as well. If that's something that you want to look at and understand. I tend to really, focus on these numbers though. So that is the income statement. Right? So now we're talking about balance sheets. This is my favorite thing to look at. And so what we have here is a basic formula. We have assets equal liabilities plus shareholders' equity. This is another thing that you learn in a very entry-level accounting class. So what we have here, we have 2021 versus 2020. And so let's go through each one of these lines here as well. You'll see a recurring thing. You'll see things like current assets or current liabilities and non-current assets. And the basics of this, without going into too much detail, is that current assets or liabilities are going to be things that are very much near term or pretty liquid. So things like cash or inventories or prepaid expenses, short-term investments. And then non-current will be things that you can't really liquidate easily, or it's hard to put a price on them specifically that you could sell. And so for example, like plant and equipment or goodwill. Goodwill is essentially just the name of the company and some other things along those lines, and so let's take a look at this here. So cash and cash items in the balance sheet on the company, and like I said, assets will have to back out with liabilities and equity. So let's go through these lines here. So $4.468 billion in cash. Their cash is down from last year. We need to figure out why that's the case. This could be concerning, but it doesn't have to be concerned right off the bat. We need to just figure out why has cash declined and how they made up for it somewhere else on this balance sheet, because maybe they have less cash, but perhaps they have no more inventory and so they just kind of shifted some assets around. We need to figure that out. Short-term investments. Short-term investments are up about $200 million over the course of the year. And the trade receivables are up almost $200 million, about $180 million over the past year as well. And their inventories are up about, it looks like, almost $50 million as well, and their prepaid expenses are down a little bit there. And then their other receivables and current assets are up. So overall, their total current assets are down by about, just quickly, like numbers in my head here, are down about $300 million. And so now let's look at some of these assets that are not current. So investment in net assets and advances to equity affiliates, that has gone up about, looks like about $220 million. Plant and equipment. This has gone up a lot, it's gone up about like $1.3 billion. Am I doing this math right? Yeah, looks like it's got about $1.3 billion. So, that is a lot. And right here you can see that Air Products have $13.2 billion in Texas. And some other places, and over in China, all over the world, they have massive plants in Germany and some other places. So, those things are now worth a lot of money. What do they think of them? That's a whole other question for a whole nother day that you can dig into and figure out how they put a valuation on those plants and equipment. But overall, okay, that's good. You see, they have $13 billion in that, that's pretty impressive. The truth is that intangible assets. This could be any miscellaneous intangible assets. So I'm not sure what what the specific ones could be. This could be like all kinds of random things like trucks or something weird that doesn't fit into plant and equipment or something along those lines. And then we have some other ones as well, at least receivables, other non-current assets. So overall their non-current assets are $18.4 billion, $16.4 billion. That's an increase of about $2 billion. So overall, actually, the total assets for Air Products has increased a bit, looks like $1.7 billion, and if decreasing, why is it decreasing? We need to get to the bottom of that. Do they have a lot of debt? We'll figure that out in the next segment here. And if I'm moving too quickly, I do apologize, but there's just so much to cover here. And like I said, your best bet is going to be reading some accounting books or some deep financial analysis books to get a full understanding of this. But one of the most important things on this balance sheet here is looking at total assets. Are they growing or are they declining? And like other things, for example, like are they selling off their equipment? Doesn't look like it. They are putting together more tools. I like that. It's good to see. Okay, so now let's talk about liabilities and equity. So, always keep in mind that assets equal liabilities plus equity. Okay. And so current liabilities, and then we have long-term, liabilities, total liabilities. So currently are the ones that are pretty near term here. So we have accounts payable, this is $2.2 billion. This has gone up. Now, this is the type of thing that we don't like to see increasing too much, because these are going to be your debts here, right? Your current liabilities, things that you owe. So we want to see assets increasing, but we don't want to see liabilities increasing too much. We want to see almost all of those going down, and you can't just say something is bad like this because there are so many things to consider. For example, we can see that liabilities have gone up for accounts payable, but that doesn't necessarily mean it's bad. Companies sometimes take on more debt to pay for their business. Imagine if you could borrow $1 billion at a 2% interest rate and then take that money that you borrowed in return 15% because you invested into a new project that ends up making more money. So companies should use debt, and there's a certain level of debt that it seems to be like a safe margin for companies. And in fact, if a company doesn't have many liabilities at all and they're not using any type of leverage, that's almost kind of a turn-off as well, because the company might not be using their assets properly and they should be using some debt, some level of debt to get a better growth rate. So continuing on here, income taxes, short-term borrowings and all of this comes out to $184 billion is the current portion of long-term debt. So overall, their current liabilities have increased over the past year, their long-term debt has decreased over the past year. That's nice to see. And then, so just kind of looking over this here, right now, their non-current abilities, which is like their long-term stuff, has gone down, and their total liabilities have gone, it looks like they've gone up about $50 million over the course of a year. So just looking at this here, we see, assets have increased quite a bit over $1 billion, and their liabilities have only increased about $50 million, so that shows that the company's pretty healthy from my perspective. And of course, we want to peel back more layers there, but that's we're doing a quick and dirty analysis here, and now we're looking at the shareholders' equity, and so we can see how many shares are there. There are 249 million shares of the company. And so this number can actually fluctuate. Companies can do share buybacks. They can, do things where they will basically buy back shares, lower the amount of shares in the pool, which basically means you and more of the company. And, a lot of shareholders do like that, but let's look at some of the things we have here. At the end of the day, let's say that the total equity is $14 million and the total debt is $12.4 million. I'm sure that makes the shareholders very happy. But what you're going to do is look at the debts and assets again, which add up to $26.8 billion. It's about the same as the total assets. This is a balance sheet, so these numbers have to be the same. It has to work out. Okay, so they have assets worth $26.8 billion. The company owes and has invested $26.8 billion. The balance sheet is done. Now, let's talk about the statement of cash flows. We just looked at the balance sheet and the income statement, and this will give you a better idea of what's going on. This will help us get a better idea of what's going on in the company. Where is the money going? So this is where we'll get that picture to go there. So, we have about $2.1 billion in net income from air products. Again, when it comes to discontinued operations, the parentheses will be used to take away from some things. So we lost about $70 million, and some other things also went down in value. $1.3 billion. How much are we going down in value? Sometimes, companies will do things like depreciate their assets faster or do other strange things. Accounting can get very strange and complicated, and there are many different ways to do it. So you should also understand that. I really like accounting. I'm weird. But if you really want to be a good investor, it's definitely something you should be interested in. So the $94 million in income taxes were just put off. This is what deferred means. You know, there are many things that can cause that to happen. Usually, they can close a facility because they can pay $23 million. We're taking out things like the gain on the sale of assets and investments, share-based compensation, and lease receivables that aren't current. You know, just go through each of these trade receivables, inventories, payables, and accrued liabilities and make sure you understand them. You can also take breaks, because this takes a long time to fully understand. So now let's look at, say, activities like investing, right? And we can see where the money was going that was used for investing. Just now, we looked at the operating activities in this whole segment. Right? All of these were business activities. Now we have things to do with money. So, for example, $2.468 billion went into adding plants and equipment, which were paid for with long-term deposits. Right? $10 million. We also had $2.1 billion from the sale of assets and investments and the purchase of investments. They have been putting a lot of money from investments into that fund. So, the investments we've already made and the ones we're making now bring in money. So it makes sense that there is more money flowing out there. I like it when businesses put money back into the company. I'd like for them to start new things. I think that's really important if a company wants to keep growing and make sure it still has a moat, and that its competitors don't get too close. And also how to pay for activities. So, payments for long-term debt on long-term debt. Then you see a big number like $1.2 billion. I think that this will be the return on investment. I wish they had these blue lines, like the blue and white lines, so we could line up the numbers without saying, there we go. So, yes, $1.2 billion went to shareholders in the form of dividends. I love stocks that give me money back. I mean that every year they give $1.2 billion back to the people who own this company, who are called shareholders. I really like it. I really enjoy seeing them. I think the company is giving out something like a 2.5% dividend right now. I've already told you that this isn't a reason to buy this stock, so you know that this isn't a reason to buy it. It could definitely happen. Today, we're just going to look at a company. At the end of the day, after reading 134 pages, you might decide, you know what? I read all this, but I'm still not convinced, and I don't want to invest in it. You know how often that happens to me. I would say probably after doing a deep dive into it, because I only really do a deep dive on maybe 1 out of every 7 or 8 companies I invest in. And that's alright, you know. But if you sort through the rest of these, you'll find that some of them are pretty self-explanatory, and you might see different numbers or descriptions depending on the report you're looking at. So companies might also use slightly different terms. The fourth financial statement is the statement of equity. You already know this one, and I don't want to say it doesn't matter as much, but we're going to spend a little less time on it. When we look at shareholders' equity, we are basically just looking at who owns the company and how well that is doing. And some other things, such as dividends that are paid to them and share-based pay for executives, for example. And a few other things that are important. But those are the most important things I look at when I'm analyzing a stock. Of course, we're only halfway through this, we're on page 74 out of 134, and all of this will be different for each business. So I don't want to bore you with reading about income taxes on short-term investments and credit losses for this particular company, because, like I said, it's different for everyone. That's how I look at stocks. It takes a lot of time, for sure. So I hope you learned a lot from this video. If you did, please make sure to subscribe and leave a like on the video.